Hey, everybody. Welcome to another episode of the All In Podcast. It's episode 56. We've made it past 55. The show, the band is still together, coming to you every Friday night, far too late, because the Rain Man obsesses over every edit in the podcast. With us again, the All In Scorsese himself, David Rain Man Sachs, and the Queen of Quinoa, the Sultan of Science, David Friedberg is here. And with a power sweater that cost more...
No, turtleneck.
I'm sorry. A power turtleneck that cost more than your mortgage payment this month. The dictator himself, Chamath Palihapitiya. I'm Jay Cal. It was a pretty incredible week. I think we have to pander to the cryptocurrency crowd because that's just making ratings go through the roof here. I am absolutely inspired by what we saw this week with the Constitution DAO forming in about a week and going from $1 or $2 million to $46 million raised through a DAO. If you don't know what these decentralized autonomous organizations are, it's basically analogous to a corporate structure, but that's written in code. So you can get a group of people together, typically in a Discord. Then you create a smart contract. They collect in a wallet a bunch of ETH, or it's typically ETH right now. And then you get some kind of governance written into the DAO where people get voting power. They brought this together to bid on one of 13 copies of the original Constitution of the United States. And it was a very controversial moment last night when 80% of the money was raised in the last 48 hours. And there was this crazy auction going back and forth with two representatives of Sotheby's on the phone. It hit $41 million. Everybody thought that the DAO had won, which would have meant that almost 20,000 people who participated in this would then vote on what to do with this $41 million offer. CoinDesk incorrectly reported that the DAO won, and then the DAO announced that they had, in fact, not. Some other statistics. Their Twitter has 36,000 followers. The group reported they needed 14 million to participate, 30 million to be competitive, and 40 million to have a great chance of winning. They raised I think 6 or 7 million while they were on the air, and the auction had started. And the only downside to all of this is that there were huge gas fees. People were spending 30, 40, 50 bucks to donate 200, which was the average size of these.
Yeah, they should have done it on Solana.
All right, so here we go, talking our own book again. Now we got somebody's going to clip this out in the salon. There's a lot of pumping dumb. Here we go.
Chamath, what are you going to do with your copy of the Constitution?
You know what's so funny?
When are you going to auction it back to the DAO?
When are you going to burn it and make an NFT out of it?
So it's funny. I did buy something at these auctions.
Yesterday's?
Quite unique. I will not comment on what it was. But
was it that turtleneck?
No. But
Banksy.
Banksy.
No. But I did. So, but I watched these auctions closely, I guess is what I'm trying to say. And I was surprised that the U.S. Constitution sold so little. For a basically like the Magna Carta of the best startup that's ever been created.
Well, but there's 13 of them, right? So on a market cap basis, you got to multiply by 13.
Yeah, great. 13 times 40 is still nothing. It wasn't one of
the originals. It was the printing after the original was signed.
We have we've created a $22 trillion a year startup that keeps compounding by 4 to 5% a year. I would have thought these things would be worth, a couple $100 million each.
Well, there's a lot of U.S. memorabilia, but yeah, but what I don't understand is
it means the U.S. Constitution, David, is not worth as much as it used to be. That's
you got you got the Declaration.
Or the original it would sell. Yeah,
there's a lot of documents. You got the Declaration of Independence. You got the Gettysburg Address. There's
dime a dozen.
The Tea Party memo.
I actually think Citizens United, technically, guys, the Citizens United, if it was written not one time in one document by the Supreme Court, that would be worth much more than 40 million because it's basically invalidated most of the Constitution.
Well, here's one of the interesting things that happened here.
No, David, acknowledge that what I just said is true.
No, I don't even understand what you just said, but
I just said if you had printed the Citizens United verdict from the Supreme Court on a piece of paper, that would be worth more than $40 million.
It was like democracy 2.0 is what you're saying.
I don't understand why people are getting so swept up in this thing. Is kind of my
Me
point.
neither. Me neither. That's the whole point.
What you guys are missing is this is a critical moment in the history of cryptocurrencies, because the first three major use cases of cryptocurrency were kind of You had money transfer, which is not as good as PayPal or Venmo or many other solutions out there.
Jason, I think
then you had store of value. Hold on, let me finish. Store of value, which is like, who cares? There's plenty of ways to store value. And then NFTs got interesting, but these DAOs are absolutely game-changing. The ability to have $47 million show up and be prepared to be deployed in 48 hours is game-changing.
You ever hear of an ICO? You ever hear of an ICO?
ICOs were illegal and they've been banned, and people are being...
How is DAO any different? I mean...
Because DAOs have governance. DAOs have governance, and it's a programmable governance. It's a programmable corporate entity. It is huge.
If these things transfer ownership interest, they will be regulated like securities.
Of course they are. That is a very important point.
And in this particular model, the idea was it would all be kind of part of a nonprofit, and it would not be kind of owned by anyone. There were donations,
in fact. Yes,
but there were donations. And so as soon as these DAOs, which they should, and it's an incredibly powerful tool, if it does actually become a security instrument, then it changes everything.
And it is going to be that.
My whole thing is like, it's one thing to...
It will be that outside the U.S. first, right? And then it'll be ex-U.S. crypto investments that are going to drive this. And that's why the U.S. is going to be left behind.
Here's what you're missing. These DAOs are pushing the envelope in the same way Airbnb and Uber did in terms of, bending the rules about ride sharing or renting your extra room. These DAOs are kind of breaking securities laws. They were telling people we're buying the Constitution. People who donated thought they were buying part of it.
We're not missing the
branding. So, okay. But here's the thing. If they bend the rules like this, what they showed to the SEC is that there is a huge appetite for people to quickly form groups of capital at low dollar amounts to do something important or interesting in the world. And Americans now have a taste of that. They're going to continue to have a taste of it. And I think it's going to force the accreditation laws to change.
I disagree. I think that what it showed is that this is yet another explanation of fractionalized ownership. That demand existed well before DAOs.
Totally.
It exists today. It'll exist tomorrow. A DAO was just yet another on-ramp. But much like most fractional ownerships are terrible financial trades for crappy assets, so was this. So said differently, if you're going to spend the time to open a Robinhood or E-Trade account, it still matters whether you buy a share of Lycos or a share of Google.
Right.
Okay. And so whether you do a DAO or whether you have an LLC, to me, it's irrelevant. The underlying asset didn't make any sense, had zero chance, in my opinion, of any meaningful appreciation. And so if you really want to make something work, and if you want to prove the DAO, then I would have hoped that they would have actually asked a few smart people, hey guys, people who buy art, people who know crypto, what are some assets that I should own? Because if this thing does appreciate, you'll do more to prove the questions that you just asked.
Somebody beat them out on so obviously the value is greater than what the DAO thought it was.
Jason,
but you're speaking like an accredited investor. This is non-accredited investors who are doing this.
I know, and that unsophistication was clear. The stupidest thing you can do if you enter an auction, is to declare how you're going to be an underbidder. So, it's basically saying, hey guys, here's my top tick. And I'm willing to be, and so now you force these guys to be the underbidder at $1 over their best price.
That's fine. That's a mechanical issue. Sachs, what do you think?
Well, I wonder if I wonder if the reason why they chose this particular type of asset is because it's a collectible and therefore it's explicitly excluded from the securities laws. So basically, that maybe they're limited in terms of what they can go after because they don't want to be a security. But if that's the case, then it does limit, I think, the applicability of DAOs, right? Because what you want is to create corporations that are programmable, that you can have shareholder votes through the tokens, things like that. Basically a digital version of what they do analog in the real world with,
share certificates,
shareholder meetings and stuff like that nobody ever attends. Yeah, that nobody ever attends these shareholder meetings. And, I get these notices of votes that are to be held. Nobody ever fills. No one fills that stuff out.
Well, and people have super voting, and so you feel like you have no say. But in this case, you do have a say. And they're going to do assets like, imagine somebody had 10,000 acres of rainforest or a potential national park, and all of a sudden you pop up a DAO, and if the SEC says, you know what, $500 or less, you can bet your money however you want. Hold on, let me finish. And they take that $500 and you get 1 million people to put $500 in, which is completely conceivable. Somebody could buy $500 million worth of national forest and say, I'm going to make this into a public trust to protect the environment. This is on the brink of changing the world.
That was ICOs. You could have done the exact same thing before.
But ICOs had no governance. They had no governance.
Okay,
that was missing. It was for the benefit. Hold on. ICOs were for the benefit of the scumbags who did those grifts and ran away with the money. This is an organization with a predetermined governance structure. This is like creating a new country or a new format for an LLC. That's what you're missing.
Okay, are you done?
Yes.
What you're missing, you're painting the optimistic scenario of what these things could do, and you are correct. Yes. But what's always happened in the history of humanity is these scenarios have resolved to people figuring out ways to scam other people to make money.
Sure.
And while this one looks altruistic,
just like Theranos, just like Nikola.
You gotta let me finish without interrupting. Yeah. Thank you. But just like, this looks like a great altruistic action. We're going to go out and buy the US Constitution. The next deal will end up being some shitty art piece that's worth $100,000, as Chamath points out. They'll buy it for 10 million, everyone will lose their ass. And the next 500 will look the same. And that's why we have securities regulators and securities laws. Because in the past, when these sorts of structures that weren't digitally governed and all this sort of stuff, and people would go around and they would put together pools of money from other people and promise them the world, and then they would turn around and steal their money and walk away. We created securities regulators that could oversee and not have independent governance, but have distributed governance across a regulatory system to make sure that this doesn't happen. And that's the slippery slope of where this goes. I'll say one more thing about the structure of this particular DAO, which I know can be resolved, but it creates a problem in that everyone is betting or investing a fixed dollar amount without knowing how much equity they're getting. And so when you say, hey, I'm going to put in $500 and there's currently $10 million, or let's say there's $10,000 in this thing, it's like, hey, okay, I've got 5% ownership in this thing. If the next guy shows up and puts in $10,000, you now have 2.5% ownership in this thing, and you've inflated the value of the thing you're buying. And that's effectively what happened in the structure of this particular DAO, where the more money people put in, the more they were paying and the less they were owning, and you couldn't adjust that. The correct structure in the future for people that do care about equity and ownership will be, I want to buy 1% and I'm willing to pay a max of $500 to buy that 1%. And with that rule engine, which I know can be built into DAOs, people can then structure what they're willing to bid and how much they're willing to participate in, and the DAO as a whole can resolve what it's willing to pay to go buy an asset, and everyone can feel like they know what they're getting as they get into these things. And then the third problem with this particular DAO, as we saw, and I know it's kind of the first big one like this, was the obvious point that these guys were showing the world how much they were about to go bid on this asset. And if you take $46 million and you divide it by 1.13, or which is, remember there's a 13% buyer's premium on this asset, they showed everyone what they're going to pay, and of course, they lost at $1 over. They were the
underbidder. I'll say something else. The only fractionalized asset that has ever been proven to appreciate reliably are stocks. Every other fractionalized asset where you take something and then you divvy it up generally has been a trash burger. You need to either own the whole thing yourself, or if you're going to own it with a bunch of other people, the only thing that's reliable are equities. Now, that's just a historical artifact for how money has been made. So I appreciate, Jason, what you're saying, which is I think actually you care about the structure, because I think it has huge implications to people pursuing wealth creation for themselves, for people participating in private markets. But I do think that you're overblowing this one example, because I don't think this showed any of that. I think that this showed how unreliable and useless Ethereum is as a transactional layer for these things. The fact that these poor people now have money stuck in a DAO that they can't get out of because the gas fees would negate their contribution. So that didn't prove that.
These are all the bumps in the road.
1 second, please. You got to hold on. It didn't prove governance because, as David said, we had this inflationary outcome where all of a sudden I didn't know the equity that I owned. The transparency worked against them because you're bidding on an asset where you were clear what the threshold max price you could pay. So you had no pricing power and you had no opacity in your bidding strategy. So I think that this was a PR lark. And in fact, they said it started out as a joke and it took on a head of steam. And so I think they felt like they had to execute. What I would say is there are going to be some really amazing examples of DAOs. This proved none of those things that the amazing ones will prove, in my opinion.
And this will invite regulatory scrutiny faster than it will keep it away, right? You will see, more of these scenarios where people get screwed out of money like they did in this particular case. And I know everyone that participated in this DAO, I know that there's altruistic reasons.
Who do they sue? Who do they sue? The people. Who do they sue? Who do they go after now that they lost the $200 that they contributed?
Yeah, there's no structure, and I think that's part of the regulatory.
How do they get the money back?
I can respond.
Who's the person that who's the person that, like, you know what? Honestly, if that DAO had called me, I could have actually bid for them and actually won that fucking thing for half the price. You know what I mean?
Sachs, you got anything? You want to chime in?
No. I mean, well, I don't know.
I would like to give a closing argument.
Yeah, why don't you go for it, Jacob?
All right. Number one, you're all speaking like a bunch of rich accredited investors. We need to think about people who do not get to participate. And what I see in my day job is people go to an equity crowdfunding site. It's too arduous to allow non-accredited investors to invest. It takes months and it's tons of paperwork. So then what happens is the best deal flow, which goes to the people who are on this podcast who are already rich, we get to sweep up all the best deals because people who are founders and who have opportunities in corporations do not bother doing equity crowdfunding because the SEC, in their wisdom to try to protect people, and they have good intent, to your point, Friedberg, has made it so arduous and painful for people that they then don't do it. The founders I'm talking about. This then keeps people down. And when we were all poor, we got to spend our money gambling or doing whatever we want with it. But we all would have wanted to have, when we were non-accredited, the ability to place a bet on a startup. And y'all are forgetting that. And what's going to happen here, all of what you're saying, Chamath, in terms of the problems here are absolutely accurate and valid. And those are what you need. You need to identify through projects like this, the gas fees are a problem. So people can move this to Solana. You need to find out that they don't know how to do bidding and maybe they shouldn't say how much has been raised so that they can come in and bid more intelligently. And maybe they do need to pick a better target. But this is $200 per person. You guys are acting like these people are going to lose their shirts.
We agree with you. I agree with you.
I don't think you agree with me.
I agree 1,000%. I'm a free markets guy. I would love for there to be no regulation and everyone will come in. And the problem is society won't let that happen. And that's the point I'm trying to make. It's not me, in my opinion.
Other societies do let that. If you're in the UK, if you're in Australia, you can go gamble and you can go bet on startups. There are different accreditation laws. We have antiquated ones that need to evolve.
The United States regulatory regime will be invoked because people will lose money and individuals will raise their hand and say, I put money into a DAO that I lost my ass on, and enough thousands of people do that. And then Elizabeth Warren and AOC will get on their high horse and they'll say, let's fix this problem. Bernie Sanders will say this is unfair. The billionaires are taking the money from people. And so I agree with you. We should let people take risks. We should let people lose money. We should drop all the regulatory burden. My point is really that I think structurally what's going to happen is there are going to be more of these things that are going to show up that will rip people off, and that will heighten regulatory interest, and people will come along and they'll start to clamp down on this stuff. And that's my point.
Okay. I also think this example has nothing to do with what you're talking about. I think what you're talking about, JCal, is laudable. And we should all want that, because I think that the broader number of people that get to participate in the wealth creation in tech, the better. But there are different ways of doing that. I don't think we have to run full force and embrace the DAO as the only way that happens. And I think that structurally, the democratic norms inside of a DAO in many ways make it much harder to govern inside a regulatory framework. And it does set up a very binary decision by the SEC and US regulators, which unfortunately they're not going to go and be supportive of, because the binary decision to support them would effectively negate their oversight.
That's right. Yeah, they got jobs to keep too.
They have jobs to keep and mortgages to pay.
I think it's a cynical and accurate prediction that they will fight it. But what you may not be aware of is that there is, in the Startup Act from years ago, they did allow equity crowdfunding. They put a lot of throttling on it. And now they're going to let you get accredited through taking a course, or like kind of having a driver's license or a gun permit. So it is conceivable that the next time a DAO happens and they're trying to buy.
Can you stop conflating these things together? We've had iterations in the crowdfunding rules. You're just trying to tag this with a DAO. Can you just separate it? Wait, hold on a second. Can I just ask you a question? Can you please just describe and acknowledge that the crowdfunding rules have iteratively evolved in the absence of DAOs?
Yes.
Okay, so just separate the two. They're not the same thing.
They are two sides of the same coin because the DAOs allow a global participation in this, and the capital can be formed instantly. This was done in days. That's what's so powerful about it. It costs tens of thousands to hundreds of thousands of dollars to do an equity crowdfunding. This costs nothing.
Because it was for an ethereal, superficial asset with a name that people recognize. Hold on a second. Now let me replace the US Constitution with, I don't know, Jason, you just sent a deal a day ago. What was the name of it? Let's just call it acme.com.
Sure.
Now what are people supposed to do? It's not a known asset. They are not known founders. There may be turbulent issues inside the company that are still being hammered out. What are these people supposed to do? How are they intelligent?
Place a small bet. Place a small bet. Do some research. Vote on it. Do collective research in a Discord. You have a bunch of researchers working for you. You defended the GME. You have a team. Your team does research, and they're smart people, and they get paid very well. You were praising the coverage that Wall Street Bets did on GME on this podcast 40 episodes ago. You were saying how incredible their research was.
Because they were analyzing public companies who are governed by securities law.
They can't do that with a private company?
Yes, because there are no rules that govern disclosure. GameStop had very strict disclosure rules because they were public. That was what allowed Wall Street Bets to understand what was going on under the hood of GameStop. It was the disclosure of the funds that the SECs forced you to make that allowed people to understand the long and the short book that was building against it. If that was in the private markets, that data is not obligated to be provided in the wild. Wall Street Bets would have had no idea. So I think you're actually proving the opposite of what you intend, which is it's the regulatory framework that allowed the retail GME position to happen.
Go ahead, David, and then...
Yeah, can I translate what Jay Cal is saying? I think what Jay Cal is saying is that we need to create some space here for innovation so that entrepreneurs can work out the kinks of these DAOs so that one day Jay Cal can run a syndicate on a blockchain and fundraise that way. Isn't that what you're saying, Jay Cal?
Or anybody. I mean, here's what I'll say. When we do a syndicate amongst accredited investors...
You're kind of talking your book here in a weird way.
No.
But I
didn't mention the syndicate. I didn't mention the syndicate.com once, except for this time.
You saw ICOs as competitors to your syndicates, but now you're all on the DAO train.
ICOs, I thought were too big. So I think you could solve this problem by looking at the bet size that people are allowed to make. So you can just say, hey, the upper limit is 5K. So now you've basically taken the individual creatoring. Well, because if you wanted to create a regulatory environment, because it would get rid of the risk of ruin.
You create a de minimis exception. So
honestly, guys,
that could be 100% of someone's net worth and 1% of another's.
Okay, so make it a percent of net worth.
No, the first principle of portfolio construction is you need to be concentrated in the things you know, and you need to stay away from the things you don't. If you cap the upside on the amount you can invest, what are people supposed to do? Peanut butter around 50 bets? And do you know what will happen, Jason? Most of those will be losers because the mortality rate in startups is super high, and they'll end up with basically nothing.
How do they do in Vegas? How do they do betting sports?
We're not arguing about how to invest. I mean, I think what we're saying is that this is where I actually agree, is that the regulators should carve out enough room so that innovation can continue around this concept of DAOs, because who knows what they could become one day. And we shouldn't kill this thing.
Hold on, we haven't killed anything because nothing exists and there are no rules about DAOs. The regulators haven't said anything. I think we all agree that crowdfunding rules should get much more expansive. That makes sense. And with that, private companies should disclose more. That makes sense, right? We all agree with that, so that you can have more disclosure and public available data. So Jason, to your point, communities can get into a Discord. Like today, if you said, hey guys, let's go and analyze a late stage investment in Stripe. What do? Blather on about it and just talk at each other? There are no debts. There are no disclosures. No, but hold on. Answer this question. So now, are you supposed to enter Carta or some other third-party platform and buy it at 120 billion? How do you underwrite that?
Very simple. Very simple. In the startup DAO concept we're talking about here, you would do exactly what angel investors do, which is say, hey, okay, let's say this Constitution DAO was to invest in startups. Okay, 20,000 people put 200 in each. We have a $40 million pool. Okay, we're all going to submit ideas, and then we're going to ask and invite those founders to come pitch the DAO on a Zoom, and we'll all vote on which ones we like best. And instead of, a venture capital firm getting access to this, now those 20,000 people could say, you know what, we're going to make 20 $500,000 bets, and then we're going to pour the 30 million into the winners of that. And that is just what I do for a living, or any other angel investor or early stage investor does. You invite founders to come and pitch you, and you place an intelligent bet, just like people bet on the Knicks or sadly on the Jets and lose their money all the time. And I like David's idea of saying, hey, maybe for the next 2 years, we'll have a DAO exception where you can raise, from 1,000 up to 5,000 people up to $10 million. And you just have to file that you're not a felon. And we have some basic framework to experiment with this, because you could buy, a building that was going to be torn down, like some movie theater for a community. You could do nonprofit stuff. There's all kinds of beautiful things you could do with this instant capital formation and government structure that is programmable.
Okay,
and
well,
it does relate to capital formation in the startup ecosystem.
Here's what I'll say. You made a great point about Uber and Lyft pushing the boundaries and forcing the regulators to react.
Yes.
You know why that happened? It's because Uber and Lyft worked.
Yes.
And it was successful. And
provided
this thing
massive value.
was not successful. And so maybe if it is, there's an on-ramp. But I would say that the energy is better served in not focusing on a PR lark, and probably just focusing on trying to improve the crowdfunding laws writ large, which are already on the books and can be iterated upon, versus an entire new body of regulation where nobody even has any idea what a starting point should be.
I think it's gonna be very hard to get those crowdfunding laws expanded under the current regime. It's sort of a minor miracle that they even got what they got several years ago, right? Wasn't that?
Well, it happened under Obama when after the 2008, right? Yes, the Jobs Act. Because in 2008, when the market crashed, we said nobody's starting companies. We're screwed here. We need to get the economy going again. So we're just going to allow more capital formation. And so the 99 rule for LLCs went to 250. And they just kind of loosened things a little bit. And now the mandate is the SEC has to have a certification test for people to do private market investing. And also people who work at VC firms, right? We have people who work for us who are not accredited. They don't get to participate, but they get an exception if they work at a venture firm, et cetera. So it's just going to
It's probably simultaneously true that this thing was massively overhyped, while also being the case that it's a worthwhile experiment that may lead to, useful innovation in the future.
What I always look at when I see new technologies doing something is I just imagine if it 10x'd and what that would look like, and if it worked. And then I just 10x it one more time. So what we're going to see, I predict, is this $40 million DAO will turn into a $400 million one in the next 2 years, and then a $4 billion one in the next 10. And people are going to do something extraordinary. They're going to do something so otherworldly changing. What if 1 million people or 10 million people around the globe decided they were going to put money in to do a solar farm or something that would help society?
You can already do that, J-Cal. I mean, that's like a manager can.
Frictionless.
Someone's got to manage it.
J-Cal's fantasizing about how big his syndicate's going to be.
Yeah,
my syndicate is too large right now. I can't accommodate everybody. So, and it's also because of the laws.
It could get bigger, right?
Well, no. The problem is you can only have 250 people in it. That's the problem.
We beat this DAO to death,
Yeah,
guys.
come on.
Yeah. We beat it to death. Okay. Anyway, I'm obsessed with it.
Clearly.
Fentanyl deaths in the U.S. are reaching a crisis point. Up
fentanyl deaths? Is that really what we're talking about?
I mean, we talked about it in the chat.
Are you deliberately trying to avoid the biggest news today of the biggest trial?
No, that was just. I get it. That's just a weird transition.
I'm just going straight down through the docket. But if you want to jump the fence, okay.
Well, I'm not
Rittenhouse was found not guilty of all charges.
It happened within half an hour of us beginning to record this podcast. I don't know how. I'm
trying to keep the Friedberg ratio up. We had a nice, strong, emotional moment from Friedberg. He obviously is going to have something to say about fentanyl and science. But okay, he's going to walk off the show now to talk when you start talking politics.
I'm not going to walk off the show.
You did last week. You walked off. You walked off and went. You got a beverage. You left for like 5 minutes.
I had to go pee.
All right, fine.
I mean, come
Just
on.
happened to be during politics. Kyle Rittenhouse was found not guilty.
That's usually when I take my break. Yeah,
exactly.
And
a third of the audience.